very interesting location if you analyze, social economics, because, and I have the data now because of the number of deals that I have done over there. To expect to get, when you buy into a certain area, you can expect to get, let's say, the expected tenant profile for that area. If you do it in large, then, by large, this is what you should expect. And interestingly, like in these areas that I would say are median locations and down from their downs, like median and down location, you can find, like, and I'm giving you examples that we are actually, screening with the tenants, like post office workers, delivery, trucks and deliveries, simple manufacturing workers, nurse, all kinds of this kind of blue collar occupation. And I feel more confident about this kind of jobs than, let's say, the white collar jobs going into 2020, 21. And I'll tell you why. I'll tell you why. The reason is because it mostly serving, like, not just basic needs, but things that, it's not going to be replaced by technology tomorrow. Someone needs to do it. And, these needs are not going anywhere, not even if the COVID becomes worse, or even if it, there is, I don't know, a depression. So blue collar work, this type of works, if you screen them well, I feel they're more sustainable than an office worker that, oh, we're doing cuts, so we're keeping 50% or 60% of our employees, which is easier to cut. So I feel there is like a good balance holding properties over there. One, for the potential stability, and secondly, because there is an interesting dynamic that these prices are moving up now. So it's like enjoying this dynamic as well, regardless if it happens or not at
Well,
this time point.
okay, I would, in my opinion, for what it's worth, um, I think any investor who enters the market today and has any anticipation of price growth is setting themselves up for potential disaster. You have to assume that you should be making your investments today regardless of future pricing and base it solely on cash flow. And
I agree.
any inflationary increases or market increases by natural progression, meaning supply and demand, that should be the icing on the proverbial cake. It should be standalone cash flow, period, end. And if it doesn't support itself from cash flow, then it's not a good deal.
That's for sure. The cash for rental investing, that's for the cash flow.
Yeah, but
I
that's
don't
only,
think
let's talk about that. That is pure, that's the only type of investing there is. If you're buying and flipping, that's a business. That's a transaction. That's not investing.
right. I'm saying that the flip strategy is more inclined to work, on increasing the, let's say, the fund value by the means of the business. And the rental, I wouldn't say it's a business. It's still a business, but it's an investment. You like put the money into work, and it's not passive. You do some work on it, but it's an investment. It's different.
The money's working for you.
I'm saying a different thing. I'm saying what you said previously, Gary. I'm saying that for the rental investment, it should be, and it is first and foremost for what it produces. And we talked about it a lot. Buys the cow. He doesn't buy it for the worth of the cow. He buys it because he wants to the production of milk, right? Right? So That's for sure. I'm saying another thing. I'm saying that not everything is about making more money. It's also about an edge. And I think the hedge here, and I talked about it before, is because for me personally, I fear and I'm concerned about where the economy goes currently with the current setup, with inflation that might be high or even hyperinflation. And I think that, and not just real estate, I think that storing value in different type assets than currency is risk management. And I think that risk management is also a factor when making allocation decision, because we're not putting all of our money into US real estate or, and I'm talking on it, not necessarily from the local investor perspective, but from even the global investor perspective. So I know that if I buy real estate outside of Israel, I have a position in USD and I have a position in real estate. It's like two positions. So I'm saying that I think it's also a risk management allocation in this sense.